So we will move on to the last concept, means of other aspects, special aspects. So we have seen the warranty, we have seen the right to return, bill or hold. Then we have seen this options, principal agent. You understood, fairly understood with the 5-step model. Now this is one exception. Okay, it's called a sale or usage based royalty on intellectual property rights. That means you have given an intellectual property right. The question comes, is it over a period of time or at a point in time? Principles are different. Now if you have given a, what is that called, intellectual property, but the sale consideration is a variable. How? Either sale based or usage based. In all the questions what we have done, what is the sale consideration? Fixed amount, franchisee, 10 crore rupees paid, fixed, that right of so much paid. But what if I give you one intellectual property, or say you are the seller, you give me an intellectual property and I need to pay you depending upon using it. Like suppose cinema, you are a producer, you have given one cinema to me, cinema rights, I am a theatre owner. What I will do, I will not pay you fixed money. Instead the agreement says, I will pay you one small fixed, and depending upon how much my customers, like sale happens in the box office, I will pay you. Now this becomes a variable consideration for intellectual property rights. For books, whatever, book sale, yeah, royalty on the books. So a special accounting is going to be applicable there. Now generally when the revenue is recognized, the day the performance obligation is satisfied, and this is satisfied at a point in time or over a period of time, depending upon the 3 conditions. However, there is one exception to this general rule. The only rule is the sale based or usage based royalty for the license of intellectual property right, the revenue will be recognized, which is the later of when you satisfy the performance obligation, that is the general rule, or the sale happens. That means you see, what is your agreement? Your agreement is to give the rights to me. Did I pay anything? I might have paid, or I may not have paid, but whatever it is, you need to recognize the revenue only when the sale happens or you transfer, whichever is later. Only one thing you'll ask me, sir, this part is understood, but is it possible that the sale has happened without transfer? Like sale happens first, transfer happens second. No, like suppose they said that when you should recognize revenue, you are the movie producer. Okay, you have given one right to me, say Bahubali 1. How do I pay you for that Bahubali movie? On the basis of sales, I will pay you, or I might have paid you some fixed also, fixed plus variable, or it can be fully variable, or it can be fixed. So what I told, if it is fixed, then this rule is not applicable. But if the variable element comes, maybe with fixed or without fixed, then you have to recognize revenue either when the sale happens or when you transfer that reel box, whichever is later. That's the condition here. You give the movie to me, I will show it to the audience. They'll give me money. No, I'm showing to the audience. I'm the theatre owner. Audience will come, they will pay the cash to me. Say 60% of the cash I will give it to you, 40% I will retain. When you should recognize revenue? When you give me the movie or when I give the sales to you? Whichever is later. But can the movie, like sale can happen without transferring the movie? Huh? Sorry? Pre-booking, that can be one scenario, or yeah, that is very good, very nice. That can be another scenario where pre-booking is going to happen. But the problem is, can I recognize revenue for pre-booking? No, because my performance obligation is not fulfilled. No, that remains as a contract liability to me, because unless I show the movie, I cannot recognize the revenue. So now it can happen when Bahubali movie part 1 and the Bahubali movie part 2, I will give it together as one combo. On day 1 only do I know that Bahubali 2 is going to come? Wait. I know that. That means there are 2 intellectual properties I will club. Now I will enter into a contract in such a way that I will charge you single price. Or maybe I say give me from the sales. So revenue from, I will try to mix it, like from the Bahubali 2 sales, I want to take it in the first case. I'll explain you, I'll show you one case. That's what, it's a little tricky. I told you now, the best beautiful question is what we are going to deal now. Understand it, it will be solved very easily. So that can be scenario where sale has happened, but which sale? Movie 1, and your satisfaction has not happened. Performance of the delivery of the part 2 has not happened. But part 1 and part 2, it is one contract. I can sell as a one contract. No, see, first of all these rules are broad, keeping certain things in mind, certain practices in mind. There are 2 performance obligations. But I will give you price in such a way that I will mix both, and I will give one, I don't know, I'll show you. With the numbers I'll show you, then you understand. That just keep in mind when you read that question, Bahubali 1, Bahubali 2. Now, what is the general performance obligation? Type of performance, general. Always when you will recognize, when you satisfy. Sale or usage based other than intellectual property, right? Like I have given one, sold something to you without, other than IP rights. If it's other than IP rights, then the timing of revenue is always satisfaction of the performance meter. Like for example, I have sold one machine to you, and I have told you give me based on your sale. You remember the first question, Mr. P sold one machine to one food processing industry. There was no thing like it's an entire amount. So I could have entered into a contract where I sell the machine. I say how much sale you make, no, 50% of that you give me. I could have done that. In that case also, I will recognize the revenue when the performance obligation is satisfied. But in the instance where a sale or usage based applicable for an IP right, then it will be the later of the normal thing, satisfaction of the performance obligation or actual sales. Yes, now this is one exception. Otherwise, generally, this is the general rule. When you will recognize revenue, when you fulfill your promise. But here, for an IP right variable consideration, you will recognize revenue when you fulfill promise or when actual sale happen, whichever is later. Now, let us solve one problem. It's question number 17. Take out question number 17 and practice this question later. Now, entity enter into a contract with the customer for 2 intellectual property licenses, license A and B, whom I can call Kantara 1, Kantara 2, Bahubali 1, Bahubali 2. You can call it any name for the sake of understanding only, which entity determines as 2 performance obligations, which is satisfied at a point in time. Now, we will not argue that 2 performance obligation because there are 2 licenses. There is, at a contract level, there is no integration. Okay, interdependency. Is it required? Bahubali 1 is dependent on 2. Need not be anything else. No, they may show you something different only there. Whatever it is. Now, both are satisfied at a point in time. How do you know it is at a point in time? How many conditions? All to be fulfilled, all not to be fulfilled, any to be fulfilled, any not to be fulfilled. Any need not be fulfilled. If all are fulfilled, then it is over a period of time. Clear? Everyone getting? Okay. That's what we are entering now. You see the beauty of this question. The SSP of the licenses are given. SSP, that means standalone basis. If somebody says, no sir, I am a very poor guy, give me only Bahubali part 1, I will give you at 16 lakh. Somebody says, no sir, I don't want Bahubali 1, you give me only Bahubali 2, I will give you 20 lakhs. This is my SSP. Okay, now you enter into one contract with one party. Case A, the variable consideration entirely to one performance obligation. The price stated in the contract is as below. So you sold one, you entered into a contract where you told the theater owner, look, license A, you have to give me 16 lakhs. License B, you have to give me 3% of the sale. Now, what is the transaction price? Plus 3% of the sale. How do you need to allocation? Because there are two performance obligations. Whom you will allocate what? Okay, but there are two exceptions. No? Is there any discount? You don't know, because second contract is like very odd, 3% of the sale. Now, there is no discount or discounted. Is there any exception other than discount? Variable consideration. They say that if the variable consideration is specifically related to any one performance obligation, allocate the entire variable consideration to that. You remember that software implementation bonus I told you that example. So, how do you allocate the transaction price now? Your transaction price has got two components, fixed plus variable. Whom you will give fixed? A. Whom you will give variable? B. Now, let us see. After allocation of the variable, our allocation objective should be met. That means, after you allocate, its allocated value should be equal to its SSP. For the purpose of allocation, since this is a variable, should you not estimate? In proportion, somewhere it should be very similar. It's not like a alpha product where you allocate 5,000, its range is 15 to 45,000. That is not an allocation objective. Now, since the second license B is a variable, should you not estimate? Yes, you estimated that the sale, which is a variable consideration, to be 20 lakhs. So, in effect, how much you allocated to A? How much to B? Does it meet your allocation objective? Perfect. That means that is estimate. So, you will estimate how much sale you may make of the future sale, and that future sales 3% is this 20 lakh. Future sale, how much it comes to? It is 6 crore 66 lakhs 66,667. That is the sale going to happen. Out of that, 3% that theatre owner is going to give to the producer. Finish. That means, okay, now you understand. Entity transfers license B when? Right now, and transfers A after 1 month. So, that for which consideration to be received fixed, that is transferred after 1 month, and for this no exceptions are applicable. Why? Because exception is applicable for sale or usage based license for intellectual, both are intellectual property. But for license A, since fixed consideration is there, you don't apply that sale or transfer, whichever is later. For A, when you recognize revenue? Because for A, you have got a fixed consideration, no? For B, variable consideration. This exception is applicable for only sale or usage based royalty for an intellectual property right. If for the same intellectual property, if the fixed consideration was given, this exception is not applicable. Because it's only, if it is the fixed consideration was given, when you recognize revenue, on the day you transfer the property. Why? Because it is satisfied at a point in time. It's satisfied at a point in time. Understood? Okay. This is the story about this case A. Now we will move on to case B. Variable consideration allocated on the basis of SSP. Now license, another theatre owner is said, same product Baba. On standalone basis 16 and 20. For one theatre owner you allocated properly, but another theatre owner you said, look, for Bahubali 1 you give me 6 lakh, and Bahubali B you give me 5% of the sale. Baba, what you are doing here? That 2% are you off? That extra you are getting, is it not related to A there? Then why you are doing different treatment for different people there? Why you said him 3 and for you 5? That means definitely you must have adjusted the fixed consideration. Yes, exactly. He reduced the fixed consideration to 6 lakhs and he increased the variable consideration. Previously, he charged normal fixed cost and he charged normal variable consideration. Since he reduced your fixed cost, definitely increased. That means this second increase, that what he did know, Bahubali 1 cost he reduced and that he pushed in the same contract to the second contract. So that timing difference I will take the advantage. Now the entity estimated sales, because there is a variable consideration 5%, and that 5% is equal to 30 lakhs. Now the entity transfer the license B when? Right now. And contract A after 3 months. But problem is, this variable consideration whom you should give? Fixed consideration whom you should give? This fixed consideration whom you should give? Both. Both should give. Why? Otherwise your allocation objective is not met. Variable consideration whom you should give? Both. Why? Because if you see here, if you give this fixed to A and say 30 lakhs to B, what is their SSP? 16 and 20. Meaningless, no. That's why what you should do, you should club 6 plus estimated 30, distribute based on SSP of 16 and 20. This time, sale or usage based license thing is applicable for the variable portion, only variable portion, for both A and B. Previously, since entire allocation, what happened to A was only fixed, that sale and usage based was not applicable to them. But this time, since variable also got allocated to both the people, so for fixed portion, there is no exception only. You transfer, you recognize. But for sale and usage based, you transfer or you sell, whichever is later. And what you sell, you don't sell A as per contract. Variable consideration is for B. But why did you increase that? Because A is also sitting there. And see, when do you use the later? It is a simple, in simple language I'll tell. If there is a variable consideration for intellectual property right, you use later of PO bar this. In the first case, there is no variable consideration for them, so no exception. You transfer, you recognize. But variable consideration was for this, but 16 and 20 met the allocation objective. Perfect. And for then, you recognize future sale, and actually it is a genuine case. Case A is a very genuine case. You don't want to play with the, what is that called, cutoff. But here you are playing with the cutoff, no? 16 lakh worth of goods, you are selling at 6 lakhs. Since part 1 and part 2 are connected, or maybe it is connected or not connected, God knows, you are increasing the sale consideration. That means something that 2% of the sale of these is represented by product A, no. That's why you cannot take 6 and 30 here, that is wrong allocation. This 6 plus 30, 36 should be allocated to A and B based on their SSP. But the problem comes, your fixed also will get allocated, variable also get allocated. Since variable consideration comes for both our intellectual property rights, see, they can twist it by telling A is not an intellectual property, B is an intellectual property. Forget about that permutation combination. Since both are applicable, you have to apply this exception to both sale or delivery, whichever is later. Fixed, but it's only for namesake, no, as per contract, no. Okay, if that is the case, I will also go and buy, no, from him. He will not give me at 6. He says, I will give you 6, provided you will take B at 5%. Is it not visible? Is it not observable? This is an observable evidence. For one customer, you give one treatment. Otherwise, I will also, every customer will come and say, give me that A only. That means these two things are clubbed now in this contract. So the loyalty due to the customer first month. Okay, now the entity transfers B at the inception. Where did he do? He also B at the inception. And A, see, understand, after 1 month, here he transferred A after 3 months. And the first month sale is 4 lakh. So you have to practice this. Now allocate the transaction price. Simple, they are telling, please allocate the transaction price, determine the revenue to be recognized for each license and contract liability if any. Okay. Then you will do allocation and all you will do, but revenue recognition for A will be when performance obligation is met. For B will be PO met bar sales, whichever is later. Since variable got allocated to this also, met bar sales, whichever is later. Okay, for this question, if it comes in the examination, first prepare case A working note. Otherwise, you will not be able to answer this. So performance obligation, you have got two, A and B. Have column 1, 2, 3, 4, 5, 6, 7. Have 7 columns. If this question comes in the examination, definitely it may come same story with a difference in the number, because this question is confusing in itself. That's why just do this working, things will be crystal clear to you. Then you can write the theory. Okay, what type of consideration in case A? Fixed. For B? Variable. How much is the amount? 16 lakh. 20 lakhs. Did you not estimate? The moment variable means you have to estimate. Delivery happened? No. A 1 month. This is now, immediate. Is a sale based royalty applicable for A? No. Is it applicable for B? Yes. Now, should you recognize the revenue at the inception of the contract? No. Why? On delivery. So why? PO not met. Performance obligation is not satisfied. Will you recognize revenue for B? Because you have delivered, no? No. Because of the exception. Whichever is because of the exception. For first one, you don't recognize. See how beautifully they have done. Fixed one, they should have told delivered now. Then immediately you could have recognized 16 lakhs. They said A is delivered after 1 month and B is delivered now. But the exception works in such a way, you will recognize A only when it is delivered and B recognize sale or delivery whichever is later. So you will not recognize at the inception because sale not yet done. So when the revenue will be recognized? For after 1 month, when they transfer. When you will recognize? When the sale happens. Okay, are you very clear? Okay, first we will write the theory and understand and see whether have you understood this. Is this clear? This table is clear? This is one working note you have done. Okay, first they asked you allocate the purchase consideration. Okay, allocation of the consideration. Variable consideration specifically belong to B. Why? Because there is an exception for allocation. This is consistent with allocation objective. So first they ask now how much you are going to allocate. You say that fixed contract we will allocate to fixed consideration of rupees 16 lakhs will be allocated to A. And you will not allocate any portion of the fixed to B, because if you allocate, your allocation objective will not be met. Because what you get after allocation, what comes, it is not going to match with their SSP. Otherwise, right now, if you fixed you give to A, variable you give to B, that 1620 will match with their SSP. That's it. Simple. See, question they asked you, what is your allocation? You explain like this. So first variable consideration belongs to B only. That's why we will give entire amount of 20 lakhs to B. However, from the fixed we will not give anything, because the moment if I touch that fixed, no, something is going to change. Okay, next heading, revenue recognition in case A. How much revenue you are going to recognize? Now, when you will when the license B is transferred, beginning, will you recognize revenue? No. So on transfer, because we will write accordingly, transfer of license B, entity do not recognize revenue. I transferred it, but I will not recognize. And see, the first working note, if you have understood it, you need not do it. That only I did it. Maybe not relevant for this, relevant for the second one, for B. First one is very simple. Anybody will understand because it's a genuine transaction. Second one was not a genuine, so you understand the complexity there. So you will not transfer B as it is sale bar usage based royalty on IP. Enough, no? Later you can write. On license B, sorry, license A, revenue will be recognized when? After 1 month, because only fixed consideration is allocated to A and that exception is not applicable to A. Some, okay, followed, no? In examination you tell that entity transfers B at the now and A after 1 month. Since B sale or usage based exception is applicable and sale has not yet happened in the first month at the inception, we will recognize entire consideration in the form of sales or royalty, whichever is later. However, for A, we will recognize only after 1 month because license A will be transferred after 1 month only, and for them sale or usage based exception is not applicable. Done. This is what they asked. Who told difficult? Nobody, no? Okay. Now you write license working B. Understand. Working B. Same, you have 1, 2, 3, 4, 5, 6, 7, 8 column, but that 4th column will be little bigger for some working. See, that's why if genuine transaction are entered, anybody will understand very easily. Allocation is a simple thing. If a complicated transactions like this you will enter, you will have got a problem. So what is your performance obligation? Yes, we have got 2 performance obligation, A and B. Yes, you want the previous slide or something? First, delivery. When it is going to happen? 3 months. This one, now. Easy, same as like the previous one. How much is the consideration? Problem is, previously it was a very simple, it was like standalone price only. So we had got fixed and variable. But now, since we have to allocate, we have got fixed, variable, fixed, variable. That 6 lakhs we are going to distribute to both the people. And that 30 lakh also we are going to distribute to both the people. Understood? So if I am going to allocate 6 lakhs, how much is going to come based on SSP? 6 lakhs into 16 by 36. Very good. 2,66,667. So out of 6 lakhs, 2,66,000 I will transfer to A, which I will recognize when? After 3 months, the day I deliver it. How much is the variable? 30 into 16 by 36. Variable also I will distribute. No, in the second case it is 3 months. In the second case, in the first, see, very beautifully drafted question. Huh? In the first case, it was first month for product A. It doesn't make any difference. 1 month you say or 3 months you say. But in the second case, first month sale happens. Okay? Sorry, sir. I'm just sorry, students. Your 30 lakhs you should have allocated. But how much sale happened in the first month? 4 lakhs. So what you should allocate now is the 4 lakh. No. 30 lakhs is in theory. But when actual sale happened, that you should distribute for recognizing revenue. No? They said in the first month, how much sale happened? 4 lakh happens. Okay, I'm just sorry because I took, that is the general allocation at the inception. But that inception, that allocation, variable, what is the use of variable allocation? No, no, second, read the second question. At the end, did they not tell allocate the transaction price? Now what is your transaction price? 6 lakhs fixed on sale and 30 lakhs variable. But that 30 lakhs is only in principle, in theory, at the inception estimation. At the end of the first month, do you need to estimate anymore? No, because in reality you came to know 4 lakh happened. That's why they said A will be transferred after 3 months, not first month. In the first question they said 1 month. Understood the difference, no? Yes. See, so first case you are clear, fixed and variable is there. In this case, we have got the fixed consideration, which we will distribute because fixed is not going to change. Not even 1 rupee he is paying more than that. So straight away 6 into 20 by 36 I will do. 6 into 36, 6 into 16 by 36. So I will get 3,33,333. Now coming to the variable, see, I can distribute 30 lakhs here. What is my estimation? When on the day 1. But I have finished 1 month and at the end of first month, out of the 30, 4 lakh got realized. So 30 makes no sense, no. On estimation, can I pass any entry on day 1? No, because usage is yet to happen, sale is yet to happen. See, if it was not sale or usage based license property, on day 1, based on my estimation, I would have passed one accounting entry for license B. I would have allocated 30 lakhs to B and passed one entry. Why? Because transfer happened. The moment transfer happened, on the estimation basis, should I not pass one recognition entry if it was not sale or usage based? Since it is a sale or usage based, I don't pass any entry on day 1 for estimated 30 lakhs. Why? Because sale didn't happen, transfer happened. Now when the sale happens at the end of first month, should I pass any entry? Yes, out of how much? 4 lakhs. So I will take 4 lakh into 16 by 36, 1,77,778. And how much I will give to B? 4 lakh into 20 by 36. So you have got 2,22,222. Now will I recognize this fixed consideration for license A? No, I will do it after 3 months. Will I recognize the variable consideration for license A? No, 3 months, no. 1 month you don't bring here. Because variable license A, again that same exception applies. It's the license A is a, this is what you asked, no. If this was a property, not an intellectual property, yes, you would have passed one accounting entry now because the sale has happened. Okay, so now you are not going to do it because your delivery didn't happen. Now for license B, you got a fixed consideration. Will you recognize revenue? Yes, very good. Understood, no? Complexity, very beautiful question. Lovely question. For variable consideration, will you recognize revenue? No. Oh, sorry. First, this is when at the inception we are talking. Now first month comes. This is at the inception. See, variable portion, whichever is later. For variable portion, whichever is later. This is delivery. At the inception is delivery. This is sales, whichever is later. Fixed portion you don't recognize because you didn't deliver. Now first month, did you deliver? No. When you will recognize? After 3 months. Now let us talk about the variable consideration for A. On inception, so definitely not. First month? No. PO is not satisfied. Sales is done. PO is not satisfied. On third month, no. Sale is done on the first month. PO is done at the end of third month. So when you will do? After 3 months. So after 3 months, the day you deliver A, you will pass one accounting entry for 2,66,000 plus 1,77,000. After 3 months, when you recognize, because by that time sale has already happened, fixed consideration is already received, but you keep it in a contract liability. The moment you deliver, whichever is later, you would have recognized both these revenues. Sorry, until that time you accumulate in a contract liability. Now let us talk about the B. At the inception, will you recognize? Fixed consideration, yes, because you transferred. Fixed you will recognize. So the moment you recognize, further no question. Variable, will you recognize at the inception? No. Even though you have transferred, sales didn't happen. Will you recognize 1 month? Yes. Afterwards, doesn't come into picture. Tell no management, don't do this. See, for a variable consideration, on day 1 you transferred, will you recognize for variable portion? This is the variable consideration. You transferred here, will you recognize? No, because sales didn't happen. After 1 month sales happened, will you recognize? Yes, whichever is later. So once it is recognized, further not applicable there. So will you tell management? After 3 months, it doesn't know, because once you recognize, matter is done, right? So go and tell, okay, sir, I also have a family. I don't want to break my head into all this stuff. Please do the contract like case A. Why? Fair value. No hiding here and there. If you hide, I will not permit it. Simple. Understood, no? Now, based on this working, you have to write a theory. Chalo, write one heading, case B, allocation of the consideration. Even though you don't do this working for the first one, fine, Baba. But without doing this working, if you, I don't know how do you write the theory for the second one. The variable consideration will be allocated both to A and B along with fixed consideration. Previously, we allotted fixed consideration to A, variable consideration to B. But in this case, both variable consideration and fixed consideration we are going to distribute to A and B to meet allocation objective. Enough, right? If I write now, if I tell you this much, have you understood? But in examination, you have to write like this. Here you tell both variable and fixed will be allocated to A and B to meet our allocation objective. Otherwise, it is not going to match with their SSP. Like if you give A 6 lakh and B 30 lakhs. So in the examination, you are going to write like this. In the given case, variable consideration specifically transferred to B, then it will be inconsistent with the principle of allocation. And fixed consideration, if you give to A and it will not reflect your SSP. Hence, follow general allocation. What is general allocation? Both fixed and variable distribute based on their individual SSP. That's what we did. 6 lakh into 16 by 30, 36. 4 lakh into 16 by 36. We allocated both fixed and variable. But why did we not allocate 30? Because 30 is meaningless there. Why? That variable is based on the intellectual property right related. If it was for fixed one, on day 1 only I would have allocated. On transfer for B, I would have recognized. Yes, now we will recognize the revenue. In bracket, you write fixed consideration because now recognition is going to change. So, license B is transferred when at inception. So, How much recognition I need to do? How much revenue I need to recognize? Rupees 3,33,333. This number will fetch you 1 mark. Just to tell that in license B, I am going to recognize 3,33,333, which is the fixed portion of the consideration. Now, license A is transferred after 3 months. So, when you will recognize license A revenue, so recognize revenue after 3 months. How much? Yes, done. 1 mark for this. You say that fixed consideration is 6 lakhs, which is distributed 3,33,000 and 2,66,000. 3,33,000 I am going to recognize right now because B is transferred. The second portion of 3,33,000, 6 lakh is 2,66,000, which I will recognize after 3 months. See students, if maybe my working is more confusing, now it looks simple. No? Or I will see if I can change the working in some simple form, like I will write 6 to arrow mark, this, variable to arrow mark, this. I'll see, I'll think about it. Followed, no? Because this, I also feel that this working is looking a little complex. See if we can simplify this, otherwise I'll also give it a try. Yes, so first consideration, fixed consideration part over. We explained that 3, 2, 2, after we are going to verify. Now we will go to the revenue recognition variable consideration. Revenue of variable. Since sale bar usage based exception applicable, revenue is recognized when later of 1 PO met sale happen. So first I'll explain that. Look, it's the say revenue obligation. Whenever sale happens or PO is met, that I am going to recognize, whichever is later. Yes, now let us talk about the B, license B. After 1 month, how much I will recognize? Revenue for B. In bracket you can write variable. Rupees 2,22,222 is recognized when? After 1 month. But can I recognize? Yes. Why? Because license is already transferred. This is the later event. This event is a later event. License is already transferred. For A also, can I recognize at the end of first month? No, I can do it only at the end of 3rd month, because you have got the sale through some other contract, the 2% extra, but the transfer didn't happen. But if you recognize 2,22,000, the entity recognizes a contract liability, no, because he has paid you 4 lakh. Contract liability. If he pays you 4 lakh rupees, out of that 2,22,000 you recognize right now, there is a contract liability how much? Rupees 1,77,778 of license A. He pays you 4 lakh now, no, but you can't recognize the revenue now. How much amount? 1,77,000, which is nothing but the variable consideration allocated to A. When you will recognize? After 3 months, when the transfer is going to happen. This is recognized after 3 months when transfer will happen. That's it. Is it not simple? No? Yes. So only thing, yeah, even I feel that the chart and the box what I have done, no, that was maybe a little tricky. Yes, think about simplifying that, but understand the logic. I loved this question among all the questions. Beautiful question. Highly probable, same question may come as it is. Okay, students? So this is the theory. They asked you the transaction price allocation and revenue recognition under both the scenarios. So you say that is a contract liability, and when you transfer in the future, at that time only you will recognize. Okay, so next aspect. So we are done here with the all the special aspects. I hope you are clear. So the next aspect will be the contract modification. It's very small aspect.